Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin rally stalls at resistance levels after temporary ceasefire between the United States and Iran sends markets into risk-on mode. Treasury proposes sweeping new compliance rules for stablecoin issuers as Iran explores cryptocurrency payments for Strait of Hormuz passage. Bitcoin is trading at $71,300 this morning, holding above $70,000 after surging from the mid-60,000s earlier this week. The rally came after President Trump announced a 2-week conditional ceasefire with Iran on April 8th, easing concerns about the Strait of Hormuz choke point that handles roughly 20% of global oil exports. Brent crude plunged nearly 16% to below $95 per barrel, relieving inflation pressures. Iranian officials claim 3 ceasefire clauses have been breached within 48 hours, and oil rebounded 2% to $97. Tom Lee from Fundstrat predicted a major rally toward $80,000 and beyond. However, Bitfinex margin long positions remain near 2-year highs at over 80,000 Bitcoin, a contrarian indicator that typically signals fragility. Iran announced it will charge oil tankers approximately $1 per barrel in Bitcoin or stablecoins to pass through the Strait of Hormuz during the ceasefire. According to the Financial Times, ships must email cargo details, receive approval, then send Bitcoin payment within seconds to Iran-controlled wallets. With roughly 20 million barrels per day moving through the strait, speculation suggests Iran could accumulate thousands of Bitcoin daily if the system scales. The United States Treasury Department released proposed rules on April 8th detailing how stablecoin issuers must comply with anti-money laundering and sanctions requirements under the Genius Act. Issuers must establish compliance programs, report suspicious activity, and offer tokens with transaction blocking capabilities. The proposal is open for 60 days of public comment. Morgan Stanley launched its spot Bitcoin ETF on April 8th, ticker MSBT, drawing $34 million on day one. The fund charges just 0.14% annually, making it the cheapest Bitcoin ETF on the market and 11 basis points below BlackRock's IBIT. Broader Bitcoin ETF flows showed net outflows of $124 million on Wednesday. 6 major Swiss banks, including UBS, partnered with Swiss Stablecoin to build a sandbox testing environment for a Swiss franc-pegged stablecoin running through 2026. Switzerland currently lacks a widely used regulated franc stablecoin, mirroring European initiatives like Qivalis, a digital euro stablecoin backed by 12 banks set to launch in the second half of 2026. The White House Council of Economic Advisers released analysis contradicting banking industry warnings about stablecoin yields. The report found that banning stablecoin rewards would increase bank lending by only 0.02%, approximately $2.1 billion, undermining claims that stablecoins could drain $1.3 trillion in deposits. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.